Financial reporting. So what is financial? What should I say?
Not close.
Oh. Right. Now, accounting is like a calculator. Accountant is same as like a calculator. But financial reporting is not only the job of a calculator. He should be able to advise the users. Look, brother, your profit is this much. Like, let's say, March profit is $2,000. February profit was $5,000. Now, if he is only an accountant, his job is simply to give this printout of the March report. Okay, take it, class. But if he is a financial reporting person, he must also add an additional piece of information. Look, brother, last month your profit was 5,000, this month profit is 2,000. There is something wrong. You got to look for it. What is the case? What is the issue? What is there any matters we need to address? That additional duty or job is what we call financial reporting. You can write it down. In financial reporting, the finance professional should also comment on the financial outcome of the business more than simply calculating accounting outputs. I hope this is very clear now. It's like this: you go to a doctor and he prescribes you to take some test. Then you go to a laboratoryist. He does the blood test, ECG, X-ray, blah blah blah. That's the job of accountant. And then you bring that report to the doctor. Doctor then put it into machine or whatever, and then he reads, and then he interprets the results. That's what the job of this person. So now the story of that accountant job is gone. Actually, many business now, they don't need these simple accountants. They don't need. Excel is there, QuickBook is there, Tally is there, Oracle is there, SAP is there. It's some very simple, stupid data entry guy. If you keep, enough. Only thing is, you know there is something called GIGO. You heard of this word GIGO? Garbage in, garbage out. If that stupid data entry guy, you tell him to do this, he sit and do that only. Then the machine will look after the rest. Then if that entrepreneur is intelligent enough to operate the machine, he can take out the results. So he don't need a guy to bring and pay a big money of a salary for an accountant only to sit and do this job. Then if you are an accountant, on top of all these calculations, you should be able to comment on the outcome as well. That's where the value addition that you're looking at, that's where the value addition ACCA want our accountants to do. Is that clear? So, that is the next type of accounting is financial reporting. On top of this, now if I draw down a circle, this circle is known as accounting. Okay, and then I have a small circle here. This is financial reporting. This is one way of interpreting the way it is arranged. On another different way, we have something called financial reporting. Under that we have, I write FA. FA means financial accounting. Okay. On this side, this is accounting. Here I have something called MA, management accounting. So that also job of an accountant only. Now, let's say if I am opening up a small factory, I can't bring 200 accountants to do every single bits and pieces of the activity in the business. Someone to work out the invoices, someone to calculate the cost of my product. I don't need two guys. This accountant should be equipped with knowledge to calculate the cost of the product, profit margin, and then he knows how much is the selling price. And then on the other hand, when I am selling the goods, when I am selling the goods, I then should be able to generate invoice, and then also I need to know how to pass the double entry. So this is the correct classification of accounting. Accounting, financial reporting, financial accounting, and then management accounting. What is management accounting? The accounting activity that is for the purpose of helping managers to make a decision. Can we write it down? Management accounting.
This is type of accounting.
Yeah, under that, yes.
Number 3. Yeah.
Yeah, management accounting. An accounting activity carried out by accountants internally for the purpose of assisting managers to carry out timely decisions. To carry out timely decisions. Is that clear? An accounting activity carried out by accountants. What I meant to say internally. Now, if the financial accountant, he will also do some external work. He will liaise with the bank. He will liaise with the customers, and he will take the report from the customer. Our report, he will compare. But the management accountant, he don't need to do all this. He simply need to work out the data available within the internal circle. And he will only look for the material cost, labor cost, overhead cost, total product cost, margin, selling price, this type of things. Whether to invest into a new product or not, should we buy this or don't we buy this? Or should we open up this business or don't we open up this type of advice to make decision to managers, the calculation, this fellow doing. Clear? So, that's what the management accounting is about. Right, now subtitle Financial Statements. If I ask any one of you here, When we say financial statement, there are how many components, or how many parts, or how many categories, or how many types?
4 times.
Tell me what are those?
Profit and loss account,
Okay.
financial position,
Okay.
cash flow,
Okay.
equity.
Okay. So the 4 types. Any other? I'm not saying yes or I'm not saying no. What do you think?
Again, please.
Question is, if you take, let's say this is my financial statement. When you open this, there are how many parts?
Balance sheet, profit and loss account.
We made their balance sheet,
Okay.
profit and loss account,
Okay.
then cash flow.
Okay.
The report.
No.
Notes. The notes.
No. So how many?
4.
4. So you said 4, he said 4, but not the same. He didn't say notes, you didn't say equity.
Yeah.
Just so you have a different idea.
Equity, what's the meaning?
Equity means one section to deal with the capital of the owners. Rasalman.
Because the equity.
They are actually with us 5. Statement of profit and loss, meaning P&L. Statement of financial position, old name balance sheet. Statement of cash flow. There were different names. Now the recent name used by IAS 1, the accounting now we will study later, is statement of cash flow. The fourth one is statement of changes in equity. Any movements with regard to the owner's capital, we will record it there. Last, disclosure notes. So you two combine the correct answer. So there are 5. So a financial statement is a document to reflect the correct financial activity of the business.
In that one assets movement report we are not attaching.
No, there is nothing called asset movement report. Asset movement report is one note shown as part of disclosure note. You call it property, plant and equipment. That's a separate note. There's nothing, that is not a separate category of financial statement. So, when you see financial statement, so you can write it down. Financial statement. And a statement comprise of financial information.
Comprise?
Yeah, comprise. COMPRISE. Comprise financial information to provide users with necessary details for their decision making needs. Decision making needs. Clear? Now, you can say components of financial statement. There are, as I told you, 5. One is statement of profit and loss, SOPL. Statement of profit and loss account. Number 2, statement of financial position, SOFP. Number 3, statement of cash flow, SOCF. Number 4, SOPL, SOFP, SOCF, and the number 4, statement of changes in equity, SOCIE, SOC,
What is number 2? So
SOFP, statement of financial position. So you want me to write the full form or it's okay?
It's better.
Okay. So this is statement of profit and loss. This is statement of financial position. This is statement of
cash flow.
cash flow. And this one, statement of changes in equity. And the last one, accounting and other notes. So you have five different components as part of your financial statement. So whenever you happen to see a financial statement, you must make sure all of them are there. If any financial statement that is not there, then that is not a financial statement. But please remember, all the financial statement comes with the audit report. Doesn't mean audit report is part of the financial statement. Now what do you think? Who is responsible for the financial statement? Let's say your company, I'm the auditor. And finally what happens is, I am bringing you a financial statement for you. Now, this is what happening normally most part of the world. Financial statement normally prepared by the auditor. And then he comes up with a very beautiful binded document to convince the client. Now tell me, who is responsible for this financial statement?
Owner.
Senior accountant or financial, the accounting person who is there.
Accounting person.
The owner.
Owner. What do you think?
Again, Mr. Mohammed, this point.
The suppose
The question is, this financial statement, min masul, yani who is responsible for that?
who is responsible to make some.
Yeah,
Yeah, it's accountant.
Accountant and the auditor.
accountant and auditor,
Auditor, they will come to inspect only.
Manager.
financial manager. You understood the question or not?
Your question is responsible for what? Prepare or-
Exactly, preparing, presenting the financial statement, the responsibility is with whom? That's my question.
Management account.
Finally, you have this financial statement, information inside for plus or minus, good things or bad things, have okay or problem. Who is responsible?
Management accountant.
Management accountant. Financial manager. See, the responsibility is ultimately to the owner. We all are tools. We as financial manager or accountant or management accountant or all of them, we just do what the owner wants. He is paying us something, we prepare. We are not, but who is signing the balance sheet page? He is the one who is responsible. Is the auditor responsible? Not at all responsible. The auditor has nothing to do with the responsibility of the financial statement. Auditor only has to say whether that prepared financial statement is showing a true and a fair view. That topic I will not discuss here. That's a different ocean to talk. We will not discuss about it. But the point you need to understand that that document is ready. Ultimate responsibility, cut-off, final responsibility is with owners or the board of directors or the shareholders. And I don't know if you happen to see the audit report, on top they will say this audit report is issued to the shareholders, to the owners, to the partners, that people are responsible for this financial statement. Clear? So that is exactly what is most important to understand. We have a big misconception we think that these innocent accountants and these financial managers or these in-between guys who are really working for some, meager salary, finally then if any problem comes, that's where they will go to courts. Really not, it should not be the case. So anyway, with that we will stop the lecture and we will continue in the